Hello and welcome everybody to another edition of Max Financial Services Market Thursdays, updates on the economy and the stock markets for November the 5th. Hard to believe it's already November, but it's here. So here we go. Another fairly profitable week, fairly exciting week this week. So what we do is we typically go over, we cover Thursday to Thursday. So we're talking about Friday and then everything that happened this week. So let's get started. So last week, the Dow was up 1.24%, finishing today at 17,863. The S&P 500 was up 1.2%, closing at 2,099 and 93 cents, well, 0.93. Crude oil was flat for the week, closed at 45.40. It's about 10-20 cents down from where we were last Thursday. The one that did move is the 10-year Treasury bonds. They popped up to 2.24% for the 10-year yield. The yields are up last week where we left off. It was 2.17%. Gold is down at 1105.50 per ounce, and silver is down to 14.97 per ounce. So why did this happen? Primarily, yields are up on Yellen optimism. So Janet Yellen, she believes that there's going to be the economy is doing okay, and that there's going to be more movement and more pressures to increase the short-term interest rates in December. As a result of that, that pushed the interest rates higher, that pushed the dollar, made it stronger, and it made the commodities, gold and other commodities, fall down in value. On the technical side, stocks are a little bit overbought. We are testing the old highs we've had before the August sell-off. I'm not sure if we're going to call it a correction yet, and we may basically need a breather from here. Foreign stocks also are experiencing selling based on hitting those resistance levels. Overall, it was the stocks had the strongest October in 4 years. Then again, October is also one of those months that can break you quite a bit as well. So that was kind of like the major stuff that happened. On the earnings side, the two that I picked for this week were Disney and Whole Foods. Disney profits were up, surprise. They're up based on Star Wars Mania. Star Wars is going to be released. There's going to be a new Star Wars movie, I believe, by the end of this year. So I'm sure that's going to be much more profits for Disney. Once you go into the parks, there's going to be lightsabers and everything else that you need to buy for the movies. One thing of note that was kind of haha funny, I believe a movie theater in Colorado is banning people from bringing their lightsabers to the screenings of the movies. So don't know how you feel about that, but it's just kind of a funny moment. The other one's Whole Foods. Whole Foods the stock was beaten up significantly. The reason why same-store sales and margins have actually come down, and more importantly, a lot of the analysts started coming out and they started beating them up over the financial engineering. So what do we mean by financial engineering? This kind of goes back to the bigger picture that we were talking about. Stocks are profitable right now, but a lot of the times we're profitable in large part because companies, they are buying back their shares. So instead of paying dividends, they're going back and they're buying their shares, which basically increases the earnings per share, which basically increases the value. Whole Foods was given a hard time because Whole Foods was going to take a lot of the cash that they have on the balance sheet, plus they're going to go borrow more money in order to buy back shares. And typically it works for most companies. However, in this case, it was a little short-sighted, and particularly on the earnings calls, what was interesting is Whole Foods was commenting that they need to invest more money into the new point-of-sale systems, they need to invest more money in the loyalty program, and we need to do more things with the stores in order to reverse the decreases in same-store sales numbers and the decreases in margins. However, they're taking money and we're using it to buy back shares instead of investing it in the company and in the business. That ticked off a lot of analysts, that ticked off a lot of professionals. They were given grief on the conference call about it, and as a result of it, the stock did suffer. It was down quite a bit. I don't recall the exact numbers because it's not one of the stocks we typically follow, but it's been happening. Is it a good thing or is it a bad thing? What does it actually mean? Well, I think it's a good thing because it shows that analysts are getting back to basics and we're starting to look beyond the financial engineering, which has really, I believe, kept the markets as high as they have been. So even though, depending on which economist you talk to, it's like even though we kind of see that the economy is doing okay, it's not great, but meanwhile stocks are all-time highs. Well, and the reason why we're all-time highs was because of the financial engineering that's been happening over the last 10, 15 years, particularly over times of uncertainty. During the Obama administration in particular, because businesses did not know what type of a legislative environment that they're going to have. Is there going to be more red tape? Is going to be less red tape? They didn't know what's going to be happening with interest rates. So instead of deploying the money back into the businesses, what they've been doing is actually just keeping the money on the balance sheets. And when the opportunities came up, they used it to buy back their own shares. And in the market where everything is based off of the PE, well, if you have less shares outstanding, your profits per share go up. And that's how that cycle continues. So that's on that earnings front. Another interesting point of note, so one of the things I've been harping about, particularly with my small business clients, is the Pension Protection Act. One of the things that the Pension Protection Act has done is plan sponsors and plan administrators, so if you're a small business owner and you offer a 401k, part of the Pension Protection Act is you have the fiduciary responsibility to provide education, and you're required to provide education, you're required to provide viable investment options and at reasonable prices. If you are not, employers can be held liable for that. This week, Boeing, the defense and airplane manufacturer, they were ordered to pay $57 million to settle a 401k lawsuit that was brought on by the employees for the breach of fiduciary duty for excessive 401k fees, both for the administrators and expensive high-risk investment options. This is the second highest lawsuit settlement number that they've had. The highest so far has been the Lockheed Martin 401k plans, which actually they settled for $62 million for similar things. Key point to note, if you're a business owner, look, it's been happening with larger companies. You have to know what's going on with the benefits and everything that you're offering to your employees. If you are not, you can and will be held liable for it. You're opening yourself up. So if you have any questions about that, feel free to reach out to us, but make sure you know what's going on with your plans. It's not enough to basically say, well, somebody else does it for me. You are liable for those options, and you're liable to provide to your employees what's mandated by the Pension Protection Act and the Department of Labor and ERISA rules. So that's basically what I have for this week. If you have any questions, feel free to reach out to us on our website, www.maksfs.com, maksfs.com. Give us a call, 609-207-7099, 609-207-7099. Once again, if you haven't taken your retirement checkup yet, go directly to our website, www.maksfs.com/retirement-checkup. And you'll be able to take your 5-minute retirement checkup free of charge directly from the website. If you have any questions, send them via email, and we'll address them if we can. And if it's pertinent, we'll cover it during one of our other regularly scheduled videos that we do. So every Tuesday we do a financial planning related topic, and every Thursday we do these market update calls. So thank you for joining us. I hope you found this of value. Feel free to share it with your friends and family, and see you